I think we have another big wave down into late this year, early next year, bounce, and then we have another big wave down into late next year, early 2024. This will be what I've been saying, the crash of our lifetime. It won't be quite 29 to 32, but it'll be more like 29 to 32 than it was 74 to 75 or 2000 to 2002. And it'll be like, I call it 2008 downturn and recession times 1.5. That's my rule. This is going to be 50% worse. Stock's going to go down 86% instead of 57, and on and on and on. We're going to get 15% unemployment instead of 10 or 11. So that's what look at. Whatever you thought 2008 and 9 was for your business or investments, this should be about 50% worse, which means get out of the way, especially in investments.
Is sobering thought. I hear you talk a lot about waves. Do you think we've reached that third wave? Can you describe a little bit about what you're talking about when you refer to it as waves?
Yeah, in a major bull or bear market, in other words, the direction you're going. And now we're in a bear market from my point of view. So the waves ought to be 5 waves up in a bull market, as we saw 87, 2000, 2000, that sort of thing, 2021. Now we're in a 5-wave sequence down. We saw the first wave bottom in June. Okay, we've bounced since then, and now we're coming out of that bounce. We're in the third wave from my point of view, just breaking below the first wave in the NASDAQ and most of the major indices in the S&P. And this third wave should be at least as strong as the first one, and it should be stronger. It's likely to be 50 to 60% worse. So we could see the worst of this downturn into early next year. It took 5.5 months, that first wave, so it's probably going to take that or more for this one. First wave took down the NASDAQ 34%. This will probably take it down, after a bounce down 55 to 60. Now that Dan is when people are going to know, this is no longer a correction. The central banks actually lost control. See, all I've been waiting on for years is the central banks to lose control, because all they've been doing is printing money. You don't solve any real problems with short-term cures, like just printing money out of thin air. You have to restructure, you got to cut back debts, you have to do real things businesses would do in a turnaround, same with the economy. So this has just been Pollyanna, and now it gets to the point where they overdid it. I think they have lost control. There's no way for the Fed. They can't turn around now and loosen aggressively after finally admit they have to tighten, and after they responded. They're stuck.
Yeah, I agree with you.
That's my forecast, basically. Australian stock market, where I'm going next couple of weeks to lecture, down 59%, which will be the worst they've seen in decades, but it'll be better than almost anybody else. Real estate, it already went down 34%. We didn't even see that in the Great Depression because we didn't have a real estate bubble in roaring 20s. You couldn't borrow money easy enough to have a bubble in real estate. It was crazy. Now we do have a global everything real estate everywhere. So I'm seeing real estate going down, what did I say, 1.5, 50% instead of 34%. Now that is painful. It's one thing stocks go down, stocks can bounce back pretty quickly, and most people don't have most of their net worth in stock. Most people do have the majority or a big part of their net worth in their home.
It's all real estate.
People have vacation homes, and a lot of people have been speculating in real estate. This real estate crash, if it's 50%, and that's just going back to the 2012 lows. It's not going that far in history. We're not going back to 82 or 90 recession or anything. Just down to the recent lows. We came out of 2008-9, but real estate took much longer to turn around. We didn't come out of real estate till 2012. We're going to just go back to those lows. That's 50%. That's how big a real estate bubble. Real estate doubled since then. So that's going to be the most painful thing for most people. Their house goes down, and this time it doesn't go roaring back up to new highs. The whole world's baby boom is turning down, except for Australia, New Zealand, and Norway and Sweden, a few small countries. So this is a back to reality now that the baby boom and all the stimulus has gone as far. We go back down to reality, and that just means stocks go back down to early 2009 lows, real estate 2011, 2012 lows. And people say, oh, that's no big deal. No.
It is a big deal. Yeah, you're talking about the big short on steroids.
The S&P, 92% the NASDAQ, and 50% in average real estate, 60 to 70% in upscale ritzy real estate. So this is going to be the biggest shock we have seen in our lifetimes. Again, more like the early 30s, maybe not quite as extreme. That was just a naked crash. They didn't do anything to stop it. No stimulus, anything, no cushioning. And it'll be the biggest. Our kids will not see a crash this big, I think, even when they grow up. And it's going to get a 95, 96%, just like Amazon and the .com. So crypto
when is this going to happen?
Bust the most.
And when will this bottom out happen?
I think actually that Bitcoin may actually physically bottom on the next crash down ahead of stock. That'll be the third wave down with another fifth wave to follow. I think that might be the final bottom in Bitcoin, but then it goes more sideways and retests that bottom. You may see the worst in Bitcoin by early next year. And again, my prediction, just back to the 2018 lows, but that's $3,233 from 69,000. What is that? Guess what? Just like Amazon and the .com, 95%.
So you're thinking
the biggest bubble, the biggest burst. So and even at 20,000 here now, go to 3. It's still going to be down another.
You're thinking January is when we start to bottom out on Bitcoin. Is that the same with commodities?
That is, I think we could bottom in Bitcoin as early next year, and stocks as early as late next year. Now this all could go a little longer. We had 40% in 87 or 50% in the early 2000s. But the markets come back to new highs quickly. The markets are not coming back to new highs for 2 reasons. The millennial doesn't even start their next boom until sometime in 2024, and will take 15 years to build that. And the central banks, after more and more stimulus, for this thing to fall apart just 2 years after 10 trillion, by the way, is 46% of GDP. You imagine explaining to your grandkids, well, our central bankers thought we should spend 46% of our GDP just to keep a tired boom going another couple years. How does that sound, kids? Would you reelect those guys? Huh? Yellen, and Powell, and Bernanke and all these guys, none of them ever had sex or run a business. I mean, I hate to say it, but they're not even in the business world. Janet Yellen looks like she came out of a nunnery. I hate to say it, but it's true. Where'd she get that haircut? I mean, these are the people that have been feeding this bubble the most. Everybody feeds it because we all a bubble is something for nothing. Stocks and real estate normally goes up with inflation rate. What's that today? 1 to 2%. Well, it goes up 10 to 20% a year recently. We're getting a free lunch. This lunch gets taken back when the central banks lose control or the bubble gets so stretched that buy and sell and measure and stuff. That's the next wave.
Well, I think you have guys buying it already. So
crypto's a big deal. It's just in its infancy, and it's hard to understand how an invisible coin could be worth $69,000. But my projections, and I'm just doing it with the .coms, a similar wave that peaked in the last tech bubble, crashes 95, 90%, and Bitcoin ends up between $500,000 and $1 million a coin.
Wow.
And at that level, it would be worth well more than all the gold in the world. It would end up being the global standard for a new global digital system of money, where that is the standard. Gold can't be the standard for a digital world growing at 5-6%. Gold supply is only growing at 1%, and it won't even grow at that forever.
Well, and at $500,000, it makes
by Bitcoin.
It makes the guys who are buying it at 4,000 seem pretty smart, I guess.
That'd be the first thing I'd buy. Now, I want to diversify, but again, why would I buy any stocks? Maybe better stocks only be down 40% from here, and others will be down 70 or 80 from here. Why would I buy any